In this video, I'll explain what wine investing is, how it works, and how you can incorporate this alternative investment into your portfolio. Thanks so much for checking out the channel. If you aren't already subscribed, please do so. It doesn't cost you anything. And it really does help out the channel. Anyways, guys, let's get into it. Let's answer the question, what is wine investing? Wine investing consists of buying bottles, cases, or shares of a company that hold a certain collection of fine wines with the expectation that the price of these high-end products will increase over time. Now, fine wine is exotic, rare, unique, and valuable. Statistics show that only 1% of the wine market is considered investment grade or a collectible, meaning that a trained eye is required to identify the most valuable specimens out there. There's actually a site called Vinovest, which is a specialized investment fund that offers access to this very niche market. They have created an index that tracks the performance of fine wine prices, much like the normal stock market indexes that we talk a lot about on this channel. Now, according to Vinovest, fine wine investing has produced an annualized return of 10.6% in the past 30 years. Not too bad. Now let's talk about how wine investments work. The way people invest in fine wine has absolutely changed as a result of technology. In the past, this could only be done by buying expensive bottles at a physical auction or more privately. The bottles had to be stored by the owner, and there were many risks associated with this activity. Nowadays, many investment funds have opted to focus on this market and have created vehicles through which investors can get exposure to fine wine without having to do, the heavy lifting. Here are 3 basic ways to invest in the fine wine market nowadays. First, invest in a fine wine fund. Companies like Vinovest, as I mentioned earlier, offer access to fine wine market through diversified portfolios and through different types of wines. These portfolios are designed and managed by professionals, and their performance has really been quite impressive over time. Another way to invest is through buying wine stocks. Wine stocks are shares of companies that produce and commercialize wine. Some of the most popular publicly traded businesses in this industry include Constellation Brands, ticker symbol STZ, and Treasury Wine Estates, TWE. And lastly, you could just buy bottles and cases directly. If you consider yourself a connoisseur, you can opt to buy the fine wine directly from a private collector or at auctions. Now keep in mind that you'll have to bear the risks and costs associated with this activity, including storing and protecting your bottles from being damaged or broken. Another thing is that there are many variables to consider when valuing a bottle. I did a little research and determined 4 main things to consider. Now first, consider the uniqueness. The lower the available supply, the higher the price if the wine's quality is actually top-notch. Now, limited editions are considered more valuable than bottles that can be found anywhere. Then you want to consider what the critics have said about it. In the world of fine wine, experts have a strong influence on how much a bottle is actually worth. And the ratings a bottle receives from top critics could define the price at which a bottle could be sold to the public or at auction. Then there's longevity and age worthiness. Old wines tend to be more valuable as long as they age well. Not all wines age the same, as there are many variables, including their flavor and acidity, that can make them taste better or worse with the passage of time. Wines can be aged for 10 to 25 years. Lastly, you want to look at who made it. Which vineyard makes the wine is also a factor that affects the price of a bottle. If the vineyard is well reputable, the odds that the wine will become valuable over time definitely increases. So now let's dive deeper into some key ways to invest in wine. The first and perhaps most obvious way to invest in wine is to buy bottles or cases and hold them with the expectation that they will appreciate in value over time. Now for this to work, a trained eye is required, as investors will need to identify those wines with the most potential for price appreciation based on the variables discussed earlier in this video. Now, investment grade wines account for 1% of the total market, and this increases the challenge for investors as they need to be very careful not to be cheated or defrauded by people who could take advantage of a buyer's lack of experience to sell average wine for a premium price. Now, world-class vineyards are typically those that produce investment-worthy bottles And here's a list of some of the best vineyards to be considered. Investment grade wine can be purchased from many different parties. First, it is possible to buy bottles and cases from private collectors and other investors. Now, in most cases, the best idea is to buy bottles and cases from either a broker or an exchange, as they can provide certificates about the origin of the wine. Now, that will reduce the risk of being defrauded by purchasing cheap wine passed as top quality. Finally, auction bonuses like Sotheby's, how do I say it? And Christie's regularly hold events in which they sell investment-worthy wine. Now, once the bottles are bought, the investor must choose how to store them. Self-storage is the cheapest alternative, but also carries significant risks. Meanwhile, it also is possible to store the bottles at a specialized facility. However, this option could be very expensive and may eat up a big portion of the gains earned from the investment. Now, in summary, investors should research and identify the bottles with the most potential to experience price increases. Once they do that, they can buy them, store them safely, and sell them later for a future profit. Wine stocks are shares of publicly traded companies that produce, commercialize, or participate in the wine market somehow. Even though the number of pure play public wine companies is rather limited, there is a list of businesses whose revenues are most derived from industry, and investors can opt to buy their shares to get exposure to this market. This is a list of some of these companies and their tickers. Some of these stocks trade on a major exchange in the United States, while others are more considered over-the-counter stocks or OTC stocks, typically those that are based overseas. And these are some of the most popular wine stocks. Investing in wine stocks is easier than buying individual bottles and storing them. All an investor needs to do is open an account with a well-reputable brokerage firm such as Robinhood, Fidelity, First Trade, or E-Trade. Ideally, though, investors should hold on to their shares for longer than 3 years. The process of picking the best wine stocks can be daunting to beginners if they don't really understand how to value a business or determine if a stock is attractive from a fundamental standpoint. And it is also important to note that investing in wine stocks will not necessarily deliver the same performance as investing in wine bottles directly. A perfect example of that is the Constellation Brands, ticker symbol STZ. They delivered compounded annual gains of 28% in the past 10 years, while Brown-Forman Corporation, ticker symbol BF, produced 14% gains during the same period. Now, wine futures are a great way to invest in wine before it's actually bottled. This type of investment gives investors ownership over a certain harvest that has not yet been bottled and that should go to market in around 2 to 3 years from now. For vineyards, this is a great way to cash in on the harvest way before the aging process is completed. For investors, the margin left on the table by the vineyards can be taken up, or it may also allow them to secure a certain number of bottles of an upcoming limited edition. Wine futures were previously accessible only to wine insiders, aka people who had a stake in the industry and knew its inner works. Now, however, platforms like VinoVest and other intermediaries have made wine futures accessible to retail investors from time to time for them to cash in on those instruments as well. Other companies such as Sotheby's Wines and J.J. Buckley also allow investors to buy Bordeaux futures and other similar and primeurs. I'm hoping I'm pronouncing those correct. Now, the easiest way to invest in these futures is through one of these companies. Multiple financial technology companies have undertaken the mission to democratize and facilitate access to the fine wine market to retail investors with little experience or knowledge in this market. These companies have created vehicles through which diversified portfolios of fine wine can be built, and they have developed intuitive and highly user-friendly platforms that allow investors to complete this process, in a matter of minutes. For many, this could be the best approach to invest in wine, as they would be letting professionals do all the heavy lifting, including the authentication of the bottles and their proper storage. VinoVest and Vint are two of the most popular companies in this particular space. They enable investors to build a diversified portfolio of fine wine with as little as $100. Opening an account with these companies is easy and can be completed online in a matter of minutes. Once the initial deposit is cleared, the investor will be able to create a diversified portfolio of multiple types of wines, or let a robo-advisor build it for them. With VinoVest, investors fully own their holdings, Meanwhile, with Vint, investors own shares of a vehicle that own a certain fine wine collection. One other thing to note is that fees do vary from one provider to the other. In the case of Vinovest, annual management fees start at 2.85% and can be reduced if the minimum investment increases. Meanwhile, Vint does not charge any management fee. Instead, they make money via sourcing fees. Now, I've shared a ton with you about an industry I didn't know much about until I did my research. Let's go over some benefits of wine investing. Now, wine investing has delivered positive gains over 10% in the past 30 years. The incorporation of fine wine into a portfolio can add an extra layer of diversification. There are many vehicles nowadays through which investors can build a broadly diversified portfolio of wine bottles and cases. And finally, wine can act as a hedge against inflation, as prices will typically go up in times of elevated price pressures. As with almost any investment, there are some downsides. First, there are many risks associated with investing in wine, including the possibility of losing the entire principal if bottles are broken or damaged during transportation or when they're stored. Storing and insurance costs can be high if investors opt to buy and hold individual bottles. It could be hard to find buyers during times of economic distress. Untrained individuals are exposed to being defrauded. After completing my research into investing in wine, I've decided investing in wine comes with some pretty high stakes. It could seem a bit challenging at first glance, but financial innovation and technology have made it much more feasible than in the past. If you're looking for a way to add an extra layer of diversification to your portfolio, wine investing could be exactly what you'd be looking for. We hope this information in this video can help you in making your first investment in this exotic market. I also want to let you know that I got a great article on the Modest Wallet blog to help continue to guide your decision onto whether or not you want to try it out yourself. I'll also leave a link in the description to any of the sites mentioned in this video. Thank you so much for watching, and I'll see you in the next video.